Let's talk about earnings from TMX Group, famous, of course, as the operator of the Toronto Stock Exchange, but it has lots of other revenue streams. Revenue in the latest quarter beat analyst estimates. We are joined by John McKenzie, the CEO of the company. John, great to talk to you again. Thanks for joining us.
Good morning, Andy. Thanks for having us.
Just maybe we'll put up a one-year chart for your stock. It is up 15% in the past year, down from its highs, though, of the summer. Looks like investors do like these latest numbers. What do you think was the one big thing in the latest quarter? What was the most interesting thing for you?
I think for us and for investors in general, what they were looking for was sustainability of that great growth trajectory we've had over the last number of quarters. And so this quarter being now the fifth quarter in a row where we posted that double-digit top line, double-digit bottom line, is giving investors that confidence that, this is not a one-time item, which is market volatility, but to your point, something that's actually built for long-term growth and success for the Canadian capital markets. So that was the biggest takeaway. We had some interesting announcements we shared at the same time on new pieces we brought into the franchise, to your point, to continue to diversify, to get into more data and indices and things like that. And they've been really, really well received.
Where do you make most of your profits these days? Can you generalize? You are very diversified, but what is your biggest profit earner these days?
Well, we drive the business into three pillars. The largest one is really data and indices. We call it Global Insights. It's over 40% of the revenue of the organization now. And candidly, it's also the most recurring, the most sustainable, and growing at double digits. So that has been part of our long-term strategy to build at least 50% of the franchise in data-based businesses, and we're almost there at this point. But it doesn't take away the importance of the other two pillars. So capital raising, listing in companies, IPOs, et cetera, and trading and clearing activity. And in this quarter, all three of those parts of the engine were firing on all cylinders.
You must be a little frustrated with the takeovers, the multiple takeovers of companies on the TSX over the past couple of years. Of course, you could argue that they're being undervalued. Our big pension funds not supporting them. We won't get into all that, but that must be frustrating when you see listings come off and you haven't had that many IPOs.
I would say it is frustrating in a limited way because it is part of the natural cycle in terms of companies coming off, but also companies come back on. And to your point, we haven't had a lot of traditional IPOs, but we've had 54 new companies come onto the two markets this year, and they've come through different means, either cross-listing or up-listing or graduation or structured products. So that's all continued to be very healthy. We've done over 272 new listings this year in total, including 200 ETFs now. And we're starting to see those green shoots of the IPO market again. So the Rockpoint Gas IPO, 700 million raised, really successful. I think this is going to be a bellwether that other companies can see that they can come back to market, that the conditions are really good. But these things do move in cycles. So our pipeline of companies that are ready to access the capital markets is as deep as it's been in years. So I'm hopeful for what comes next.
Now, just remind us what you're doing in ETFs, because your Vetify acquisition was partly about that.
You're absolutely right. So not only do we list ETFs, but we've got the ability to create the underlying indices that an ETF used to put their basket together. We can help them with distribution in terms of reaching an investor audience. We've done a number of acquisitions this year to continue to build out those capabilities. So we can do that now in Europe, in Canada, in the United States. And the most recent one that we talked about in the quarter is we've brought a new suite of indices into the platform as well. Very much like your last caller you were talking to, the energy sector is so important with demand for energy for AI. We've brought in a suite of new nuclear indices to really give investors the opportunity to invest behind the long-term trend for building out in nuclear energy. So we're constantly looking at how do we bring more indices under the suite. We have over 1,250 indexes that we manage now to give that broad perspective of different asset classes that investors can look to.
That's interesting. I hadn't heard about the nuclear indexes. What do they track in particular?
Well, they're really tracking public companies that are engaged in both nuclear production and delivery of energy. And they're not domiciled in single countries, so it gives an investor a chance to get exposure to that industry, very much like you would invest in potentially the oil industry or the gas industry or the pipeline industry, that distinct focus on nuclear.
Just, you may have seen that there's talk that Newmont might buy Barrick Mining, or there's speculation. And of course, it looks like Anglo is going to buy Teck. Now, Teck, its primary listing will no longer be in Toronto. The merged company is going to list in London. That must be a bit of a disappointment for you, that a premier company, mining company, won't have its listing in this city.
Well, I would never want to comment on a specific transaction, but let's look at the underlying. We build great mining companies in Canada. We've got over $1 trillion in market cap in mining companies. This is the largest exchange for mining in the world. So the fact that some of our companies are sought after, what shouldn't surprise us, is actually a mark of success. At the end of the day, my understanding is going to be listed in both markets. I always look to primary listings should be in Canada. This is the best mining market in the world. We've got the deepest liquidity. We've got the broadest range of assets. Almost half the financing in the world gets done on our two marketplaces. So my recommendation to any company is your primary listing should be right here. It's where you're going to get the best access to investors in this industry.
John, we'd better jump. Thank you very much indeed.
My pleasure. All the best.
John McKenzie, CEO of TMX Group.